What does this rate mean for mortgage holders and the housing market in Canada? We're joined by Ron Butler, mortgage broker at Butler Mortgage. Great to see you, as ever.
Great to see you.
You think that Tiff Macklem's message was the Canadian economy is in trouble, or struggling anyway?
Sure. I think the Bank of Canada governor simply stated the obvious. For particularly people living in Ontario, things aren't great. Much higher unemployment rate than other parts of Canada. And youth unemployment through the roof. So yes, it's 14% youth unemployment. That ain't a good thing. Sure, we're not going to have a great economic story in 2025.
That means lower mortgage rates. Ultimately, presumably, it'll tend to bring down bond yields and variable rates.
Well, the bond yields are a little bit harder to predict. There's the Trump effect of possible tariffs. There's a lot of the bond vigilantes in the United States, so that's a tough one to make a perfect call on. But will variable mortgage rates go down? Absolutely. They came down today 0.5%. They'll come down throughout the early part of next year as well.
Will that tend to push people back into the variable mortgages? They got burned, didn't they, by the huge run-up?
Horribly burned. But let's face it, for the 10 years from 2009 through almost 12 years through 2021, it was the lowest rate you could get your hands on.
I mean, you were taking on risk, and yeah, but you got a discount for that.
You sure did.
Yeah. Sorry, you mentioned the bond vigilantes in the States who typically will jump on a government's bonds if the deficit is getting out of control. And so Chrystia Freeland updates us Monday. There's speculation that she didn't get anywhere near her target of $40.1 billion deficit last year.
Yeah, she might be 50% above it. Could be 60 billion. So we anticipate that there will be a certain reduction in bond yields going into the spring in 2025, that there will be a certain reduction in those fixed rates, particularly in the favored 5 or 3 year fixed, but not spectacularly. You know, I think we'll very soon see a lot of variable rates in the 3% range, like 4.5 now after today. We'll see some variable rates below 4, and we'll see eventually a few occasionally rates 5-year fixed back down to 3.99, but right now they're all the way up to 4.19, 4.29, some even as high as, like on a rental property, some even as high as 4.59. So yeah, those rates have sort of bounced back up in the last little while.
Can you remind us, how low did the variable rate go?
How low did it go?
During COVID.
For a CMHC variable rate mortgage, this is the government insured mortgage, pay a big insurance premium. At one point, it reached 1%.
Wow, that's free money, basically.
Totally free.
Yeah.
Totally free.
It's interesting you mentioned Ontario. I hadn't been checking out the province versus the others. Ontario, of course, post-war, it was the wealthiest province for decades. It's hard to remember that now. But do we have high unemployment in this province?
7.6 in Ontario. It's strangely, it's high in Alberta as well, even though there's lots of new jobs being created. Alberta's just brought in a huge number of people in the last years, many from inter-province. Look, what we're going to see in Ontario is a substantial reduction of people in the construction industry. There's going to be a lot of lost jobs in the construction industry in Ontario.
Why is that?
Because there's no more condominium towers being built. They've opened 80 sales offices in the GTA to sell these new condos. It's a 6-year lag by the time you open the sales office, sell 80%, and start building. It's a 6-year lag to completion. So I think 77 of those have closed. They just could not come in. I think the highest penetration was about 40%. You need between 75 and 80% to get started with financing. So yeah, the towers you see, the cranes you see in the air on towers being completed, that's the last of them. There's one estimate that by 2031, there'll only be 1,500 residences completed in the GTA. 1,500, not 15,000, just 1,500.
Wow, for a city of millions, whatever, 3-4 million, the GTA area. What about single homes, though, detached homes or single homes?
We quit building single-family homes to any great extent in Ontario back in 2018. The ratio between high-rise and low-rise went to about 75-25 in favor of high-rise. So there's just, and the Greenbelt traps the whole region. The Ontario Greenbelt traps the whole region. It's very hard to develop new subdivisions. So yeah, we're going to see a distinct reduction in construction jobs in Ontario.
And also,
similar in BC as well.
Right. Is these iniquitous, well, sorry, I'm editorializing there, these very high development charges charged by local government, are they a factor too?
They're a huge factor. They're almost, in some cases, depending on the municipality, they're 30% of the cost of a new home. Interestingly, Bonnie Crombie, the Ontario Liberal leader, proposed to eliminate development fees if she's elected. So see what's going to happen.
She'll have to, I mean, these municipalities are cash straps, I guess.
They are, but she's struck a hard tone, and the Municipal Act is an Ontario Act. So if she gets the majority and she does it, the cities don't have any choice. They have to eliminate it.
I know it's hard to generalize about the housing market across the country, but with these cuts in interest rates, are we likely to move back into any kind of frenzy to buy houses?
I don't think so. I think that because of this growing unemployment that we see, there's an opportunity for people to stop and say, wait a minute, I don't want to make a huge buying decision at this stage of the economy.
Ron, always great. Thank you very much indeed. Ron Butler, mortgage broker.